Good morning. Welcome to Market Mashup, our weekly recap of financial markets and what we have on tap this week that might impact stocks and bonds. I'm Scott Nasker, President of Generation Capital Management. Tough week last week for stock markets overall. We had the Dow Jones down 3%, the S&P 500 down 2.7%, and NASDAQ was down 3.3%. So a lot of risk off taking place last week. So it's really culminating in pretty much a tough February after we had such a strong start in January. I'd like to talk about the bond market again, mention these numbers. The 2-year right now, Treasury yield is at 4.77% and the 10 years at 3.9%. So, significant inversion still taking place in the markets, and it's something that we have to pay attention to as, what happens with the yield curve, especially with the spread inverting, will lead to economic slowdowns and, most likely a recession. It's what it's done in the past if history is any guide. So the bond market is basically telling us that there's tougher times ahead in terms of economic conditions. And obviously we want to, keep an eye out for that. It's something that we'll be pointing out every week when we do our updates is what's going on with especially the 2-year and the 10-year Treasury bonds. We have quarterly earnings that are coming to an end. This week we have Target, Lowe's, and Salesforce that are going to be out. It's been a tough earnings season so far. Had slower growth, slower earnings projections. So it's playing into the whole economic slowdown. So you want to keep an eye out and see exactly what Target and Lowe's specifically state, because they're a really good pulse for what the consumer is doing and see if their spending habits are starting to change at all. You have some economic data points coming out this week. We have consumer confidence on Tuesday. We have ISM manufacturing on Wednesday and jobless claims on Thursday. So, just some more data points for the Fed to keep an eye out and review and just see if there's any changes in terms of the outlook on the economic conditions that would, have some type of differing viewpoint in terms of what they're talking about with interest rate policies. What's happened over the last month is with inflation numbers that have come up very high. We're starting revised higher. We're starting to see more of the rates are going to be higher for longer talk that's taking place now, whereas earlier in January, there was talk of, the Fed's going to pivot, they're going to stop, they're going to start to lower rates. So that's not being priced in at this point for 2023. So it's something to take a look at and keep an eye out for. And it's, one of the main reasons why the S&P was, or really like stock markets are lower for the month of February. If you have any questions, please feel free to reach out to us. www.gencapmgmt.com. Team's ready to answer any questions that you might have. Provide a second opinion to your portfolios. Make sure that your allocations are meeting your goals and objectives and have suitable risk tolerances in place. So give us a call. Be happy to talk to you any point in time. Team's ready to help out any way we can. Just look forward to having the opportunity. We also have our blogs, our financial tips up there as well. If you can take a look if you want to on our website, just get a better understanding of where we think things are going and our viewpoints on the market. So feel free to reach out to us. Once again, my name is Scott Nasker, President of Generation Capital Management, and this is Market Mashup. Have a great week.